I'm here today with SThree's CEO Mark Dorman and CFO Alex Smith to discuss their interim results. Mark, can you provide an overview of the period?
Well, we're delighted to report that we made strong overall progress in the first half, a result of the hard work of our teams across the globe. We've continued to execute well, guided by our purpose and our strategic focus, despite what continues to be an unprecedented backdrop. Net fees and profits have not only grown substantially from H1 2020, they have also surpassed levels that we saw in 2019, really reflecting the strength of the business and our strong growth trajectory. We are making good progress towards our key strategic ambitions, taking market share in our core regions and investing in our infrastructure to build a world-class operational platform. In line with our commitment to building a sustainable future for all, we are proud to report that over 16,500 lives were positively impacted by SThree in the first half. We also significantly strengthened our position as a talent provider to the low-carbon transition and grew our renewables business by 37% in the first half of 2021 compared to the first half of 2020. Overall, it has been a very positive period for SThree, and I take this opportunity to thank everyone in the business for what we have achieved.
Alex, what were the financial highlights in the period?
We delivered very strong operating profit growth, up 106% in the half, driven by better market conditions, increased demand for STEM skills and flexible working, and improved productivity. As previously communicated at the trading update, net fees were up 10% year on year to £164 million, with Q2 net fees up 22% year on year. Beyond the year-on-year figures, we are particularly pleased to also be able to report growth versus 2019, with net fees in the half up 3% and up 8% in the second quarter. The DACH region was up 17% versus 2019 in the second quarter, and the US up 26% versus Q2 2019. Operating profit was also up 18% versus 2019. This shows that we've not only recovered from the impact of COVID, but have returned to a growth trajectory. Our contractor order book was also up 33% year on year and up 13% versus the same point in 2019. Again, a strong sign for the future. Our financial position remains very strong, with net cash at £48 million at the half year. And we are very pleased to have approved an interim dividend of 3 pence per share, set at a level consistent with the dividend cover target for the year in the range 2.5 to 3 times that we've previously indicated.
Mark, can you provide some detail on the progress made against your strategic pillars?
Of course. Our first pillar is leveraging our position at the centre of STEM to deliver sustainable value to our candidates and customers. And over the first half, we've made good progress in this. We've nurtured specialist candidate communities and encouraged new entrants to the market with educational virtual events. For example, we delivered 14 events to support women in the tech industry with over 1,000 people attending. Our second pillar is to create a world-class operational platform through data technology and infrastructure. In H1, we invested in our marketing and communications team, implemented new VPN, firewall and data loss protection solutions, migrated 469 virtual servers to reduce risk, and we reduced our carbon footprint by decommissioning 64 physical servers. The third pillar, to be the leader in the markets we choose to serve, we've demonstrated further progress against the same. In the first half, we've increased our Net Promoter Score to reach a very impressive 53. We remain confident we are making sustainable gains in taking market share and improving productivity. And last but not least, our focus on finding, developing and retaining great people, we've made good progress here with important appointments of Andrew Beach as our CFO designate, Sunny Ackerman as our president of our US business, and Rebecca Matz as our group comms director. Alongside this, we have bolstered our focus on diversity, equity and inclusion across the entire business.
And can you give us some guidance on the outlook for the group?
H2 has begun strongly, and as the sales activity momentum built across H1 continued into current trading. New deal activity remains buoyant, contractor retention rates are strong. As previously communicated, we remain cautious around the expected impact of both contractors and our people using up annual leave backlogs, as well as the potential for contractors to begin working fewer hours on average per day as COVID-19 related restrictions ease. In the second half, we will continue to deliver against our strategy as we build our investment in people, digital experience and tools, as well as our go-to-market position. We are putting in place our policy around hybrid working, leading to greater flexibility and the ability to attract diverse and top talent. We will continue to drive the group forward in the coming period towards our 2024 ambitions that we set out at our Capital Markets Day. Our aim remains to continue to take market share, working towards our ultimate goal of becoming the #1 STEM talent provider in the best STEM markets. We have the right strategy, guided by our purpose, and the right position to benefit from the two long-term secular trends of STEM talent and flexible working. And finally, I would like again to extend my deepest thanks to Alex Smith, who will step down from the board in July, for his contributions to the group for over 13 years and for his partnership and guidance since I joined the company. On behalf of the entire senior leadership team at SThree, I wish Alex the very best. I'm also delighted to welcome Andrew Beach to SThree as our new CFO. He joined us 2 weeks ago today, and I'm looking forward to working closely with him as we continue to drive change and work towards long-term sustainable growth.